Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning. Let's mark out our monthly stats levels on the chart that we prepared yesterday and see what we have in terms of the monthly range. Then we'll take a look at where we currently stand. First of all, regarding last month's stats, I deleted the levels from the chart already, but if you'd like, you can go back and watch the previous stats video for reference. Anyway, in terms of levels, the upper and lower wick averages were both hit, while none of the average move targets based on closes were reached. However, the time window was spot on, as price made its low exactly in the average time window. That gave us the confluence for the sideways range idea, which we've now seen play out since the monthly candle closed inside the range without making a new high or low. Now, let's take a look at what we have for this month and mark out the time windows for the monthly statistics. Okay, based on the monthly averages, we can now see our current price range for the month. The average loss sits around 16 to 17%, which would put Bitcoin roughly between 91K and 90K. That's the level, statistically, where Bitcoin could close if we get a bearish month. But for that to happen, price would first need to break several key support levels, which for now hasn't happened. Only if those supports give way can we start looking toward those lower targets. Until then, it's not an active target, just something to keep in mind. On the other hand, the average gain sits 16% as the median and 24% as the average, which would bring Bitcoin up to a new all-time high. If it also closes around that level, it would be a very strong monthly performance. And from there, we'd look at our other statistics to see whether any top signals begin appearing. When we look at the average wicks, they actually align nicely with the current range. For the bearish wick, we have around 115K, and for the bullish wick, the range sits roughly between 104K and 103K. That means if price moves down, that's where we'd want to see a reaction. Of course, these are average ranges, not precise levels. So we don't look at them to the dollar, but rather see whether we have confluence there. And yes, for the downside, we already do. We have the local lows, the weekly order block, and the weekly EMA sitting in the same area. Plus, if we check the daily and weekly cycles, they also align right around that zone. That's a strong multi-time frame confluence. Now regarding the bearish EMA target, on the 5-day chart, we can see a bearish EMA cross, which historically leads to a retest of the lower EMA. That target sits now around 104,799K. Looking at our local levels and confluences, that's exactly in the same area as our other supports. I'll come back to that point shortly when I explain what I'm watching next. But first, let's finish with the bearish wick averages. Those sit near our resistance zone, mainly around the local range high and the mid-range of the broader structure. It's a simple SR zone, meaning price could continue ranging here or even perform an SFP of that high and then keep ranging for a few more weeks. Now let's connect that to the time statistics and the EMA target mentioned earlier. On average, in uptrends, Bitcoin tends to form its monthly lows early, usually within the first week, around 8 to 9 days. Sometimes it happens later, but statistically, the early part of the month is where most lows are made. Meanwhile, the highs tend to form later in the month. In downtrends, it's the opposite. Highs form early, lows come later, typically during the second half of the month. That's what I'll be watching for now, but with a small adjustment to fit the current range context. I still believe we're inside this range, and I want to trade the range boundaries, the lows and the highs. So, my current plan is, if Bitcoin moves down first into those lower levels and also touches the bearish EMA target on the 5-day chart, then that setup would be completed, and I wouldn't aim for those same lows again unless we get another EMA cross on the following days. Until then, I'll simply expect range behavior before any breakout. If Bitcoin moves up first, then I'll likely take some profit from the longs I have from lower entries, while also watching the resistance area for a potential short hedge, since it aligns with the monthly wick statistics, a strong SR level, and the bearish EMA target below us, which historically has always been hit after a cross. That's the simple plan for now. I don't expect a breakout yet. I'd like to see one more revisit of the range lows and highs before making the next major plan. Of course, if price hits the low first and just keeps falling, then my spot trades will continue running according to plan. But until something major like a confirmed breakout happens, I'll keep trading this range for at least a few more weeks. From there, we'll see where we stand. Specifically, whether Bitcoin manages to hold the higher timeframe support or not. On the weekly timeframe, I also marked all the value area highs, lows, and points of control. We can see several of them overlapping right in this zone, so it's definitely a major area of interest. On the monthly timeframe, this could easily be a higher low attempt, as long as we don't break below the last swing low. For that to happen, price would need to lose this entire higher timeframe support cluster, which, as we saw last time, isn't so easy. Remember, that dump had huge volume and triggered one of the largest liquidation events in Bitcoin's history, yet price is still holding above 100K, right on the support zone. So with that said, I won't predict a support break until it actually happens. At some point, of course it will, but until then, I treat this as a support area. Okay, now let's take a look at what we have locally. First of all, the daily cycle level I talked about last time. Another touch of that level would actually be quite nice, and statistically, that has happened more often in the past. For now, we've already had a second or even third touch of that level, but only one buy signal so far. That's why, if price comes back down to that level again, I'll still treat it as support, and I'll be watching closely for when the buy signal appears. For that signal to trigger, I'd like to see a touch followed by a green daily close. Only then does it officially activate the setup. Even without that, the level is already showing reactions, which makes sense because it's a higher time frame level with a lot of confluence around it. If we look at the yearly price time chart, we can see this is also the new yearly SR level after being adjusted to match the new high. So this area carries multiple layers of confluence, structurally, statistically, and temporally. By the way, the next yearly Fibonacci time is just around the corner, landing on November 8th. Interestingly, that also aligns with one of the monthly time windows for either a low or a high to form in the first part of the month. So my simple approach here is to observe where price is when that time window arrives. If we're trading near support, I'll look for a reaction to the upside. If we're sitting near resistance, then I'll look for a reaction to the downside. Of course, sometimes these time pivots can act as continuations of the existing trend, but in general, the logic remains simple. When price meets time, look for a reaction, and often that's where reversals begin. Momentum-wise, on the monthly time frame, we can see that it's still inside the bullish control zone, but it has crossed down again and remains pointed downward. As long as Bitcoin doesn't close this month above 120K, which would basically be above our local resistance area. That means, for the bulls, we'd need at least a range to hold the pressure, or a strong move upward to invalidate this downside momentum. On the weekly time frame, momentum is also pointing down, and Bitcoin would need to close above roughly 160K to flip that back up, which again aligns with our local resistance area. So all that adds extra confluence to that zone, being a short or hedge level if price rises, because it's essentially the make or break point for momentum. For me personally, I'm still trading the range, and I'm not reacting too heavily to the momentum crosses yet, because this can easily go sideways, reset, or even push higher to invalidate the short signal. Yes, I'll hedge at resistance, but as mentioned before, I'll only consider a deeper move lower if the higher time frame level here is lost, meaning a weekly or monthly close below it. For now, that hasn't happened. On the 5-day time frame, volatility is starting to increase, but it's not yet confirmed. If volatility breaks above 15 to 16 while momentum remains down, that usually forms a setup that pushes price in the direction of the momentum. The last time we saw this setup was around the 100K area, where volatility expanded and momentum was down, and that's when price broke down and formed the next bottom. So it's definitely something to keep an eye on. But as I said, For now, I'm just trading the range and not front-running those signals that could lead either higher or lower. On the daily time frame, momentum has also crossed down and will remain that way as long as Bitcoin closes below 114,700, which once again lines up perfectly with our local resistance area and the monthly wick statistic levels. So just as we have higher time frame support below, we also have a cluster of resistance confluence above. And if price fails to break that, it becomes a bearish retest zone. In conclusion, for now, I'll continue trading the range, recognizing that we have strong confluence below support and strong confluence above resistance. Until either side breaks on a higher time frame, the range remains the main play. So now, that's the plan. I still have my long position, and if price goes lower first, I'll add to it, targeting the higher level afterward. From there, I'll look to hedge the longs, depending on whether we see weakness or strength at resistance. If price rises first, then I'll hedge earlier, targeting the lower levels and/or the EMA target, which still remains untouched. It's a simple range plan, nothing complicated. Originally, this was a trade from the previous low, where I had already taken partial profits. Now I'm adding back into it, following the same plan. Of course, if price breaks down, then the whole range idea gets invalidated, and I'll simply wait for the next trade setup. Until then, the range remains the main play, guided by the local monthly time windows and the average levels that are relevant for this structure, and for possible breakouts in either direction. Before I wrap it up, I want to mention this chart that a lunar guy showed me. Shout out to him. It tracks the business cycles, and interestingly, Bitcoin seems to follow a very similar rhythm. Every time the business cycle topped, Bitcoin also formed a major top shortly after. But this time, we don't yet see a clear rally in the business cycle charts. That's why I'll keep monitoring this. It could become another useful confluence tool. For now, since the business cycle hasn't topped and none of my statistics show a top signal, I still expect higher prices, whether we range first or move up directly. The statistical top is not confirmed yet, and I don't go against my data until proven wrong. If this time turns out different, I'll just adjust the stats for the next cycle. Simple as that. I don't lose much by investing from the lows. And of course, I don't start investing up here around 100K. Major investments should always be made on bottom signals, not when I'm already watching for a top. But as mentioned, for now, there's no top signal, so I simply trade the range and expect another push higher until the market proves otherwise. While I trade the range, one of these trades could eventually become a runner. Personally, I believe the long will become a runner sooner or later. But if it turns out to be a short, that's fine too. The main thing is to stay focused on what's happening locally right now. So for the next trades, these are my two key areas, one for the long setup and one for the short setup. And with that said, I wish you all a good day and a happy Halloween.